Hey everybody, in this video we're going to go over Cleanspark's earnings. I have a couple of clips from the actual earnings call, and I'll leave the full thing down below for you to listen to. It is about half an hour long. So this isn't going to be everything that was gone over in the call, so I highly recommend you check it out. So I'm going to give you some points that I got out of the call, and then we're going to listen to some clips here. First off, they did mention that their 16 exahash goal by year end is on track, and 99% of the miners needed to reach that goal are already purchased. And in one portion of the call, they go over how they acquired these miners at the bottom of the market. They basically called the bottom of the market on the purchase of these miners. And this is very good because as we move forwards, as Bitcoin likely goes higher in price as we approach the halving, these machines will cost more and more money. So this will dramatically help their CapEx or capital expenditure. And we already have the majority of these machines purchased, and that big expense is out of the way. And another great thing to think about is they mined double what they mined 1 year ago. Their hash rate has grown dramatically. Now, another good thing I got out of the call is that they do plan on continuing to increase their HODL balance as we approach the halving. And they did mention how much it costs them to mine per Bitcoin. It costs them anywhere around 11 to 13,000 per Bitcoin. And as we expected, they did see a record-breaking quarter. But let's roll the clips and listen to the actual call, and then I'll follow up by checking out the chart. Let's get into it. Consider hitting the like, subscribe, ring the notification bell if you appreciate these videos, and let's roll the clip.
This quarter has positioned us to reach our year-end target of 16 exahash per second, which I add, we've been making noteworthy progress towards. The Washington expansion is well on its way to being fully operational. The land at Sandersville has been leveled and prepared for construction, and we've acquired 99% of the machines either under contract or in transit that we need to fill both of these facilities. It has been a quarter of execution. The work ahead of us is about fulfilling the existing commitments we've made to you as shareholders as we grow quickly and mindfully in preparation for halving next spring. That hash rate, even with difficulty reaching all-time highs, resulted in 1,871 Bitcoins mined, doubling what we mined during the same period last year. Recall that Bitcoin's price was substantially higher a year ago. During this time last year, we mined fewer Bitcoin, but the value of that Bitcoin was higher. This resulted in revenues increasing slightly when compared to the same prior year period. When compared sequentially, Bitcoin's recent price recovery has resulted in higher revenues quarter over quarter. In particular, I would like to call out that our efforts resulted in adjusted EBITDA turning positive for the fiscal year to date and the current quarter, reversing and overcoming the negative adjusted EBITDA we experienced last quarter during the lowest of the bear market lows. Efficiency is one of the most important indicators for miner health as we head towards halving. In April of next year, the block reward will decrease from 6.25 Bitcoins to 3.125 Bitcoins. Well, a corresponding price action is expected to take effect, as it has in past halving cycles. Only the most efficient miners will have the production capacity and balance sheets to capitalize on this historic event. At Cleanspark, we are positioning ourselves to take full advantage of the halving by ensuring that we are among the most efficient miners in the industry. I'd like to share with you two principles that are guiding our training regimen. Our first principle is mindful growth. There is a season for rapid growth, and there is a season for slower and more moderate growth. We are in a rapid growth phase, and will continue there for the next few quarters. For perspective, we expect to more than double our hash rate by reaching our guidance at the end of the calendar year. That is extraordinary growth. As I said earlier in the call, we have secured about 99% of the machines we need to reach our targets, and the infrastructure that will house those machines is advancing at pace. We are excited to have you on board for this rapid growth stage and for the returns we expect to generate. We believe this is an exceptionally good time to be a Cleanspark shareholder. Our second principle is maximizing profitability. We expect to achieve this through efficiency gains and the benefits of scale. There is a misunderstanding about our industry that the work is as simple as finding cheap power, plugging in a machine, and then riding it out. But a little sophistication goes a very long way. We have been implementing various high performance and high efficiency measures at many of our sites and have found that we can meaningfully increase the margins of the Bitcoin we mine with minimal impact on the total amount of Bitcoin we mine. Maximizing profitability during the last few months preceding halving also allows us to hunker down, increase our HODL balance, grow our capital, and prepare to make good on the events surrounding halving when that moment arises. As I mentioned, our future deliveries include 20,000 Bitmain S19j Pro Pluses and 45,000 XPs. The purchase of those XPs was a big win for our shareholders, and I'm proud to claim that with this purchase, we called the bottom of the market for the price per terahash for the XPs. These are incredibly efficient miners, and we are thrilled to add them to our fleet. We predicted XP prices would drop, and we patiently waited to make this purchase until the conditions were right, resulting in what we believe is a better ROI on the purchase as compared to any of our peers. Once received and energized, these machines will add 8.74 exahash per second to our hash rate, giving us a total hash rate of 15.9 exahash, leaving us a small delta of 100 petahash per second to reach our targets. We expect to fill this gap with additional XPs. Hash rate, I might add, that will be owned and operated by us. Our Washington expansion, which is expected to add almost 2 exahash per second to our operations, is on schedule and expected to go live in mid-June. Our teams and partners have worked tirelessly to meet deadlines. As you can see in the photo on your screen, that work is paying off. By the end of this week, 3 of the 4 buildings will be complete. The 4th building is ready for the racks to be installed, and we expect to start racking machines in the completed buildings this month, so that once we are ready to turn on the power, the facility can go live without delay. Allow me to update you on the Sandersville expansion. This expansion, once fully complete, will add 6.3 exahash per second to our operational capacity, bringing the total capacity at Sandersville to 8.6 exahash per second, making it one of the largest Bitcoin mining data centers in the country. We'll supply further updates on the timelines in an upcoming monthly update.
We had an excellent second quarter where we saw growth not only year over year, but also over our Q1 performance. Diving into the numbers for the second quarter of our 2023 fiscal year, this quarter we mined 1,871 Bitcoins, which is more than double our Bitcoin production over the same quarter last year. Our revenues increased 14% to $42.5 million compared to last year. Our revenue per Bitcoin this quarter was approximately $22,700, whereas last year our revenue per Bitcoin was over $41,000. While our revenues do not reflect the significant growth in our hash rate and Bitcoin production over the last few quarters, we are well positioned to take advantage of even the slightest increase in Bitcoin prices. For example, looking at our performance compared to last quarter, we mined 22% more Bitcoin this quarter, yet our revenues increased over 50% sequentially. As you're aware, Bitcoin prices saw 2-year lows late last year, as our average revenue per Bitcoin was $18,100 in the first quarter, a 25% difference from the revenue per Bitcoin recognized this quarter. Looking at our gross profit, the changes in Bitcoin price had direct effect on our profitability. Compared to the same quarter last year, we saw a decrease in gross profit of approximately $8 million. However, our gross profit increased over $13 million compared to the immediate preceding quarter. Our cost per Bitcoin mined was $11,700 in the second quarter, compared to $9,600 in the second quarter of last year. This increase of 23% was primarily due to difficulty increases and higher costs of energy at our own facilities. We believe that the cost of power has somewhat normalized, and we expect our blended break-even price to remain in the range of $11,000 to $13,000 per Bitcoin. With the anticipated energization of the 45,000 XPs in the back half of this calendar year, we would expect the best-in-class efficiency of those machines to help keep our price per Bitcoin mined in this range, so as long as domestic energy markets remain stable. Moving to the next slide, our GAAP loss for the second quarter was $18.5 million, compared to a slight loss in the same quarter of last year. The majority of this difference was due to increased depreciation and amortization of approximately $11 million, driven by our significant purchase and deployment of top-of-the-line Bitmain ASICs, as well as the assets acquired in the Washington and Sandersville transactions. Compared to Q1, our net loss favorably decreased $10.4 million, or 36%, which is primarily driven by significantly lower Bitcoin prices last quarter and consequently lower gross margins. Turning our attention to the balance sheet, we held $10.3 million of cash on hand at March 31st and 196 Bitcoin. That brought our total liquidity over $15 million. Our book value of total assets is over $530 million, which includes $5.4 million in assets classified as held for sale. We continue to pay down our long-term debt rapidly, as we paid down 11%, or $1.9 million, of our debt in the last quarter, bringing the total down to $17.6 million outstanding. I also want to point out, in our April Bitcoin mining update released last week, we disclosed that we held 313 Bitcoin as of April 30th. With the increase in Bitcoin prices and corresponding increased margins, we are expecting to increase our HODL balance if Bitcoin pricing maintains these levels. Lastly, I'd like to emphasize how meaningful our recent purchase of 45,000 XPs is. This purchase is important, not just because the acquisition represents the lowest price of XPs on record, but because we have now fixed a large portion of our CapEx equation. Historically, ASIC prices have followed trends of Bitcoin, and while we remain optimistic about the price appreciation of Bitcoin, such appreciation has historically come at a cost, with higher ASIC CapEx. Therefore, by fixing the price for these 45,000 miners, we're able to plan our cash flows with greater precision.
Hope you guys enjoyed those clips. Let me know how you feel down below, and if you listened to the full call, let me know what else you got out of the call. Now, chart-wise, we have something that just flashed. We have a golden cross. Now, we are pulling back today. If we continue to pull back, this golden cross may turn back into a death cross. However, this is very good to see. Now, one thing that's not so good to see is we do have what looks like a double top. We weren't able to break this roughly over $5 area. Now, I'm still keeping an eye on this channel that we've been forming, and if we do continue to pull back, first I'd be looking for a test of the 50 and or the 200 MA. Right now they're right along each other. Watch for that to maintain, and if we do break those, watch for this lower trend line on this channel. But you know, if we continue to pull back, if the market shows more weakness, if Bitcoin pulls back a bit more, we'll show you Bitcoin really quick, and then I gotta wrap this video up. But don't be surprised that Cleanspark could potentially go into the threes, just based on the chart setup. And when you look at Bitcoin, I wouldn't be surprised to see Cleanspark show some more weakness as Bitcoin continues to look a little weak. We do have this support level right around 27,000. If we break this, I'd say we're likely to test our 200 MA once more. We did test it previously back here in March. You know, we were just moving on up. We were pushing on higher, going up to 25,000 before a huge pullback, nearly to 19,000 before a very nice bounce off that 200 MA. I am going to be watching for that again if Bitcoin continues to show weakness. And while it isn't oversold yet, I do see any pullbacks on Bitcoin moving forward as great opportunities to buy. I do believe as the halving gets closer and closer that these prices, when looking back, it's going to be kind of that point of you want to kick yourself. Why didn't I buy more? Why didn't I buy on the pullbacks instead of, you know, just sit on the sidelines and wait to potentially see a new low? In my opinion, yes, we can of course go down to the 23s, 25s. It wouldn't be surprising. But over the mid to long term, I do expect Bitcoin's price to go much, much higher, just based on how the cycles have played out and how they will likely continue to play out. But let me know, guys, where your thoughts are surrounding Bitcoin and Cleanspark. Is any pullback a buying opportunity for you, or are you waiting for some more bullish trends? And in terms of this earnings call, you know, I think things went pretty good. Although I wouldn't be surprised to see more dilution moving forwards and maybe one or two more unprofitable quarters. But seeing that they've got the majority of their miners already in place and already ready for that 16 exahash target goal by year end, that gets that initial expense out of the way. And as Bitcoin slowly but surely goes up in price as the quarters move on, I do believe by the end of the year they will reach profitability. But thanks as always for watching, guys. I appreciate you, and I'll see you next time.